Thank you everyone for joining us today. I'm Beth Gallick, Executive Director of the Bay Area Manufacturers Association. This webinar is made possible thanks to the FloridaMakes Network. The mission of the FloridaMakes Network is to improve the productivity and technological performance of Florida's manufacturing sector. The FloridaMakes Network is an industry-led initiative operated by Florida's regional manufacturers associations in partnership with industry, research, educational, and economic development organizations, both public and private, at the state and national levels. The network provides services focused on three principal value streams: technology adoption, talent development, and business growth. BAMA, your host for today's webinar, is proud to be part of the FloridaMakes Network. We support manufacturers and promote economic development in the Tampa Bay region. BAMA provides a forum to exchange ideas and share best practice information, network with colleagues, and learn about manufacturing-related topics through educational programs and tours. BAMA supports STEM programs and offers scholarships to students pursuing manufacturing and STEM education. If you would like to know more about us, please check us out on our website, www.bama-fl.org. If you are an attendee from a county that BAMA does not serve, please contact FloridaMakes so that they can connect you to the local regional manufacturers associations. We're committed to providing you content that you have requested during this time of crisis. Our next webinar is Monday, April 6th, Blockchain, Cybersecurity, and Managing Liquidity. On April 8th, we'll have a manufacturers panel discussion for the manufacturers located in the Tampa Bay region. And on April 7th, an online training, strategies to develop employees during the time of uncertainty. As a participant, your audio will be in listen-only mode using only your phone or computer, whichever is more convenient. There's an opportunity to ask your questions using the chat window. The questions will be sent to you by email following the presentation so we can maximize the time for our presenters. This is a live webinar event which will be recorded. A link to the recording will be provided to you within a few days. Today's presentation is titled COVID-19 Best Practices, Stimulus Plan, Insurance, and Access to Capital. We have three presenters today from experts in their field: Drew Wilson from USI Insurance, Javi Zaninga and Jay Wadsworth from PDR CPAs and Advisors, and Stephen Hochek and Diane McKelvey from American Momentum Bank. I would like to welcome our first presenter, Drew Wilson. Drew, a property and casualty practice leader for the Tampa Bay market. Drew has been in the insurance and risk management business for 30 years since 1990. Having been with USI since 2012 in a leadership role since 2015. Drew's education credentials include DeVry University for Technology, St. Petersburg College, Eckerd College, the Insurance Institute of America, Accredited Advisor of Insurance, the National Alliance for Insurance Education and Research, Certified Risk Manager, and earned the distinction from Certified Risk Managers International for 10 years of excellence and commitment to education. Drew holds 220 property and casualty license. Drew has been involved since 2013 as a board member and chairperson for the Bay Area Manufacturers Association. Welcome, Drew.
Thank you, Beth. And first of all, for everybody who's listening in on the line, I hope that everyone is well and safe and dealing with these trying times that certainly in my 30 years, just when you think that you've seen absolutely everything, something like this happens that completely changes the game. So today what we're going to talk about, I think we titled our section, Have You Checked Your Insurance Policy? And although you have received a tremendous amount of information out there from the web and in email, et cetera, watching the news, I'm probably going to give you maybe a little bit different spin on it. And I'm going to give you some helpful information that I think that will help you kind of navigate these turbulent waters that we find ourselves in today. And so I'm going to go through the first series of pages very, very quickly so that I can get to the meat and potatoes of the message that I wanted to spend some time on. and then I'm going to be transferring it over to my colleagues who will actually start to give you some information that I'm sure you all are going to find very interesting. Beth, if you would mind going to the next slide, please. We'll keep going. So real quickly, the agenda is we're going to go over some key coverages from a very, very high level perspective. But more importantly, I want to get to the second point, tactics to manage your current insurance program. And then I want to get to what we call claims preparation guidelines. And there's a reason for this. And I'm going to share those reasons with you because there are some things out there that we need to be mindful of as we're currently going through this current crisis. And then I'll talk briefly about some client resources, which is essentially going to our webpage if you needed more information on any of the topics that I'm going to go over today. Next page, Beth. Okay, so first, as my entry level, as I get into these insurance coverages that I'm really going to go through very rapidly, as I mentioned before, the first thing that I think to understand is that this is a very interesting scenario that we find ourselves in. Most insurance policies don't cover nuclear war. I think we all understand why they don't cover nuclear war, because if we did and we actually had a nuclear war, regardless of the degree of severity that it was, it would essentially bankrupt the insurance business. And so recognizing that, about 15 years ago, the insurance industry moved to essentially not intending to provide coverage for a pandemic. And I think you can see why. You look at the stock market, you look at what's happening, you look at the interruption in your business, and you can see that this is a serious, serious moment in time. So one of the first coverages that kind of everybody has thought about when we started, when this occurred, was talking about business interruption. And generally speaking, there is very limited, if any, coverage at all from a business interruption perspective, primarily because disease, population disease, and viruses are not covered in the insurance policy. So unfortunately, when you're talking to others about business interruption, what you're going to hear is that there largely is no coverage. Now, there can be some very random elements where there can be some small amounts of coverage. You have to look at every scenario by a case in an independent basis. Next page, Beth. Now on workers' compensation, again, generally speaking, like influenza, workers' comp's really not designed to cover diseases or illnesses from population. But there can be a couple of exceptions as it relates to workers' comp. And this one, what you'll see on a couple of these points is if an employee could have contracted the virus as during the course of their employment, and or if their job duties place them at significantly higher risk. There can be exceptions where workers' comp may be responsible for paying for this. So those are some considerations to think, and I'll talk about some more items on workers' comp in just a few moments. Next page, Beth. OSHA has actually come out with what they call their reporting requirements as it relates to COVID-19. And in the event that somebody were to mention to their employer that we have contracted COVID as a result of my occupation and this occurred at work, OSHA actually deems that to be a recordable event. And the reason why we bring this up to your attention is because if we do not record events timely as it relates to OSHA, obviously we can find ourselves in scenarios where there could be fines from OSHA. I think that would be a very poor judgment on their part, but it is written and it is out there on the books. So be mindful of that. Next page, Beth. Okay, so these next sections are really just talking about some other coverages that perhaps most people don't think about, where there can actually be implications resulting from COVID-19. First of all, one of the items that we talk about here would be talking about directors and officers coverage, right? It is not out of the question to think that maybe groups of employees not bring a lawsuit against their employer, alleging some types of decisions that were made on behalf of the global group of employees collectively. So there, how employers and directors and officers and stakeholders deal with managing this crisis could be something that we come to learn here in the future. Obviously, cyber, there can be some things here because obviously we have employees working at home. We have other types of representations that we're making as it relates to our cyber systems and things like that. We need to be sure that we're in line with that. And obviously, when you talk about employment practices, that's EPL. Communication to employees is critical. And knowing that HIPAA has several regulations that they apply to employers, you can see that obviously you need to keep that information private because it is HIPAA protected information. Next page, Beth. This again goes further into D&O, and one of the things that we believe or we expect to see in the future resulting from COVID-19 is respecting insurance companies to perhaps ask lots of questions around COVID-19 and things like that. We also expect that there's a good possibility that there could be some litigation out of this. And we expect that pricing could be a little more firm. So I guess the big idea on this page that I would tell everybody on the call is for your upcoming directors and officers renewals, we recommend that you start the process early. Next page, Beth. In environmental. So when people think of viruses and bacteria, sometimes environmental comes to mind. And we can say that this coverage is very murky at best because there are many exclusions that exist in these insurance policies that deal with communicable disease and human-to-human transmission. And so we believe that those exclusions will be applicable and perhaps you would not have much of a remedy for your insurance policy in this particular area. Next page, Beth. And general liability is the last thing before I start getting into some better content here. The general liability, it's possible that if you look at the examples here, that individuals could bring lawsuits against businesses. And the stereotypical example, if you were thinking about it from a manufacturing perspective, is if you look at the third bullet point that says a delivery worker contracts the virus that is later linked to a location that had received a delivery from the worker. Right, or vendors' employees get it by being at a customer's location. So we think that there may be some instances that come out of this thing where we find some litigation that involves our general liability policy. And so just some more mindful things to think about there. Next page, Beth. Okay, so this is, so first of all that stuff that I told you before, that's all the bad news. The bad news is, again, as I mentioned, there's very little remedy under your insurance contracts. Luckily, I have some partners that are going to be coming in behind me that are going to be talking about some things that will actually help you through this transition. What I will tell you, tactics to manage your insurance program, kind of what we're talking about here is obviously we know that it's very likely that your sales are down. It's very likely that your payrolls are down. But there are things that you can do as it relates to your current insurance program that you should do, to help yourself through this crisis and to manage through the crisis. And some of those bigger examples of all of these examples are request an extension for premium payments. We've seen the majority of insurance companies actually relax their premium payment requirements, meaning they are suspending notices of cancellation. Some companies have gone all the way up through May 1st presently as it stands. So that could help as it relates to cash flow. So create the flexibility around premium payments. There can be some examples where it may be better for you to extend coverage. So if you have a renewal that's coming up in the next 30 days, but you don't have any understanding of what your business is going to look like in 30 days, there can be some examples where you can reach out to the insurance companies and perhaps ask them to give you an extension to a point to where you may have maybe a little more line of sight or time. If you've received notice of cancellation from your insurance company for non-payment of premium, again, reach out to them and tell them, hey, here's what's happening. And what I think you will find, because almost every insurance company has come out with that stance, is that they will relax that premium payment requirement to help you get through it. But here's some other things. So if you have a lot of vehicles and your vehicles are sitting idle, you might want to think about maybe removing the collision coverage. And if you just remove the collision coverage, what that will do is that potentially could reduce your premium. It will reduce your premium. But by keeping what we call comprehensive on there, that still provides you the coverage for fire and windstorm should something happen to your vehicle while it's in the premises. Again, what's nice about that is, again, if you can save a little bit of money, that perhaps can help you through this process. If you're looking at property, usually your property insurance includes that thing called business interruption. And if your business has been impaired and your sales revenues are not running at the same level that you were running at before all of this started, then there may be rationale for you to reduce that limit a bit to be more commensurate with what your actual annual exposure is, right? So that would be something perhaps you could do to seek a little bit of premium relief. And then for any policy that's audible, again, many of your general liability policies are based on sales. And so if your sales are lower, right, there's nothing wrong with you going back to your practitioner and saying, hey, we told you we were going to do 20 million. It looks like we're going to do about 15 million this year because of what's happened. Can we make changes to our existing policy presently so that we can get the benefit of the reduction in cost to help you through this trying time? Next page, Beth. Okay, so I think, Beth, this will be the last page that I finish on because I'm looking at what my time is here. And so here's what I will tell everyone on the call. Although I gave everybody a bunch of bad news saying that there's no insurance coverage or likely no insurance coverage for many of these items that we discussed, that's not to say that our recommendation is not to file claims if you have a loss against your insurance company. And here's why I say that. The reason why I say that is because, as you know, the federal government is involved doing many things. We are also seeing states, the state of New York by way of example, and we expect other states to follow where they are too involved in this. And there are movements around the country where the federal government and states are telling the insurance industry, we want you to cover for these business interruption losses. If, in fact, that they are successful at forcing insurers to pay these business interruption losses, again, they didn't expect that they were going to have to pay this. They're probably going to be backing them up somehow, almost like terrorism risk. Maybe you've heard about that in the past. So our recommendation for interruption and many of the other, particularly business interruption, what I would tell everybody on the phone is I would begin to gather documentation. I would begin to collect data and information that supports the interruption that you have received as a result of COVID-19. And we would tell you to begin to start talking with your insurers about putting in a claim. Because at the end of the day, if the courts actually or the states actually make the insurers pay for these losses, then you would be ahead of the game by already having your information in and already starting to collect that information. Again, I don't know that that's going to happen, but I don't think anybody knows if that's exactly going to happen or not. But that would be our recommendation. The rest of the pages here that you'll be able to see on the website are more of the information that you need to collect in order to prepare these claims or to prepare your information to submit to the insurance company. And so, Beth, while we're bringing on our next speaker, you could just kind of thumb through those pages very quickly. so everybody can see that. And of course, you'll have the ability to go and see that on the website. But every page kind of talks about what you should be gathering in order to file a claim. That's my concluded content that I had today in the time that I had. Luckily, I've got my partners coming in behind me that are actually going to talk about some things that are much more helpful rather than the information that I've been able to give you. So thank you all very much for your time. It's been a pleasure. And Diane, it's up to you now.
Thank you very much, Drew. And if you do have questions for Drew, please type those into the chat feature, and we will present those questions to Drew and have those answers and sent out to you by email following the presentation. Next up, I would like to introduce Diane McKelvey, a Florida native. She works and lives in the Tampa Bay area, serving her clients with kind of dedication that comes from 25 years of experience in business management and client relationship management. As a commercial lender, she assists small to medium-sized businesses with commercial real estate financing and C&I lending solutions. She graduated from St. Leo University with a bachelor's degree in business administration and a focus on marketing with a master's degree in business administration. Ms. McKelvey supports her community as a member of the Greater Tampa Chamber of Commerce, as sponsorship chair and a judge for its Small Business of the Year Committee, and the program committee member for the Bay Area Manufacturers Association. She also enjoys serving the Tampa Bay community as treasurer and volunteer for End 68 Hours of Hunger Tampa, a junior achievement volunteer, and has served as president of the Network of Executive Women. Thank you, Diane.
Good morning. Thank you, Beth, for that introduction, and thanks, Drew, for your information. We're in a very challenging time, and it will likely impact your businesses in some capacity. I hope that the information shared with you today is helpful. As a disclaimer, there are many lending institutions that are legitimate and helpful to businesses. Unfortunately, it's also a place for predatory lenders in the marketplace. Protecting your business is essential, especially now. This information is provided to help you ask questions about loan solutions you are considering and to help you identify potentially predatory lending practices. When a business faces financial challenges, especially in times of crisis like we are experiencing now, unfortunately, it's an opportunity for predatory lenders to enter or expand their presence in the marketplace. Businesses become vulnerable as they face the challenge of meeting payroll and all financial obligations related to their business. And I'm sure many of you are very anxious about what's coming up. Times get tough. Your 2020 budget has changed drastically. Revenues drop, but payroll and all the bills keep coming in. So what do? This is not a time to find a quick fix. Couple of points I want to share with you is some steps you can take now if you haven't already taken them is to call your money people. Call your banker, call your CPA. If you're working with a fractional CFO, call your fractional CFO. Call your trusted contacts that can give you guidance and can refer you to credible and ethical financial solution providers. Avoid making decisions out of desperation. This helps you avoid predatory lending tactics. And I'm sure that the stress of the impending situation we're in is bringing a lot of stress to all of you. So be very cautious in who you get advice from. Make sure that you reach out to the people that are invested in your organization and want to see you be successful. One of the points in calling your banker is that you can ask them for options and solutions. If you currently have a mortgage, if you currently have some real estate lending in process now, if you have a line of credit, if you have equipment loans, you should reach out to your banker and ask for assistance with that. If they can offer you an interest-only period, maybe they start at 90 days, you can also ask them to defer your mortgage or current loan payment. There are a lot of options out there, and bankers genuinely want to be able to help you through this time. A good banker will give you good guidance and also answer your call. If you have a line of credit opportunity, some of you will qualify for a line of credit with your existing bank relationship. You may want to reach out to them and ask them if they can give you something during this time. So you really want to start with your bankers, the people that you work with closely and already know what your financial situation looks like. And if you're close to them, they're already anticipating that call if they haven't already pulled your information together from their portfolio and reached out to you directly. To avoid predatory lending, first step would be to explore bank and SBA financing first. Talk to your FDIC institutions. They're regulated. They also have good guidance that they can share with you. If that option is not available to you, if there are some credit issues and there's some concerns, do your homework on the company that you're considering working with to get these loans. If something sounds too good to be true, it probably is. Most of this is going to be common sense, but when you're feeling pressure of cash flow and trying to find a solution for your business as you go forward, making decisions that are detrimental to the business are going to be very challenging, because you want to be able to do what's right for you and your employees and your business, but you're very limited with that. So that pressure adds a whole nother element of decision making that we often get caught up in, and we sometimes make the bad decisions. So be very cautious when you're considering those. If you're approached by somebody, a lender who is very aggressive, if you feel very pressured that this person has picked up the phone and is trying to encourage you to take out a loan that you're not really sure about, but you're feeling pressured by that, really take a moment and really consider what they're offering you. If they're offering you a quick fix, they're asking you to give them your bank account number so that they can send you some funds, and you don't know this person, be very cautious of that. That's not typically a practice that you would want to participate in. That's a red flag. If you have somebody who's an aggressive closer and trying to get you to hurry up and sign on the dotted line without reviewing and understanding the terms, that's a fear-based tactic, and you want to be very careful with that. Pause and reevaluate that. When you're looking at your terms of these loans that are being offered to you, if you really should understand them. There are going to be some fees that are very normal. You know, origination fees are normal, but are they unreasonable origination fees? Are they unreasonable maturities, timeframes? Does the interest rate, do you understand the structure of the interest rate? Is it a fixed rate, a floating rate? What's the index that it's tied to? What's a reasonable rate at this time? Rates are very, very low right now, so be very cautious of what you're being offered and make sure you understand how that works. Consult your attorney or a trusted business advisor in reviewing these terms so that you truly understand them. Predatory lenders will often I don't want to say not want you to be successful, but there is opportunity for them to liquidate your business, and this is liquidate your business or your property. You want to be very mindful of what the risks are for taking out a loan if you don't truly understand the terms or the consequences of that. Make sure you spend time reviewing it with the folks that are professionals and that can give you that guidance and feedback. My part of this is relatively short and sweet. I want to make sure that you really get an opportunity to hear from Javier and Stephen as they're discussing the SBA rollout so that you can really capitalize on the time that we're spending together. I want to thank you for the opportunity to share this information with you. If you have any questions about any items, you have any concerns, please feel free to reach out to your banker. They should be able to give you guidance, and if you are truly banking with a relationship banker, they will be taking your call and calling you back. If you have any questions that you want to send an email to Beth to, feel free to, and I'll be happy to see what I can do to help you with those questions. I appreciate the time that you allowed me to spend with you today, and I hope that you all stay well and good luck on this journey.
Thank you so much, Diane. Again, if you do have questions for Diane, please add those to the chat feature under questions, and we'll have those addressed and sent out to you by email. Again, the presentation is being recorded, and you all will have access to the recording within a few days. Next up, I would like to invite Javi Zuniga and Jay Wadsworth from PDR CPAs and Advisors. Javier's experience includes corporate and partnership tax compliance, international taxation, individual taxation. He is also part of PDR CPAs and Advisors, R&D tax credit and cost segregation practice areas. Javier has a BS degree in accounting from the State University of New York, College at Old Westbury. Javier serves on the board of directors at the Upper Tampa Bay Chamber and the Morton Plant Meese Healthcare Foundation. He is a member of Vistage International and is also part of the Tampa Bay Waves Mentorship Program. Javier is also fluent in Spanish. Jay Wadsworth focuses on corporate taxation and has a strong tax planning background. Jay has extensive experience with R&D tax credits and cost segregation and has assisted many business owners in taking advantage of this as well as other tax credits. Jay has a BS in accounting from Wake Forest University and an MS in accounting from Stetson University. Welcome, gentlemen.
Thank you. Good morning. Beth, Drew, and Diane, thank you so much for your collaboration and input. To our participants on the call, we hope that all is well and appreciate your time as we navigate these extraordinary circumstances. The info we'll provide is meant to provide you with a macro overview of the CARES Act loan programs. Please use your judgment and diligence in seeking the appropriate strategy for your particular case scenario. Next slide, please. So the CARES Act, under administration by the SBA, and Stephen will get into a lot more detail as to the banking perspective, as well as Diane provided some of the information. Under the Small Business Administration guidance has rolled out 2 different loan programs. The Paycheck Protection Program, what's now known as the PPP, and then there's also an EIDL loan, which is the Economic Injury Disaster Loan. For the first part of our presentation, we'll go through some of the frequently asked questions that we have seen in terms of the separate loans, and we'll start out with the PPP. So as I said, the PPP focuses on the Paycheck Protection Program, and it's meant to assist small businesses because you got to meet certain criteria, which we'll get into in a little bit. But it's meant to have these businesses be able to meet their obligations in terms of mortgage, insurance premiums, healthcare premiums, payroll, some utilities, and other debt. One of the important aspects of this loan and the major difference between this and the EIDL that we will discuss later is the fact that there is a loan forgiveness aspect to this. Jay?
Yes, correct. So the PPP, again, based on your payroll and the superiority to the other 2 programs, either going through the other federal loans or going through the Florida loans, is that you can, if used correctly, have all or part of it forgiven.
Excellent. Next slide, please. As we go through, and the standards were updated last night at about 9:15 p.m. So I know there's been a lot of questions for sole proprietors and individuals that are independent contractors. Please, as Diane indicated just now, reach out to your lending institutions, reach out to your banks, because the information is still flowing. As of about 10 minutes ago, I just read a news report where some of the banks are scaling back on rolling out their platforms for the SBA scenarios because there is quite a bit of moving parts on this and a lot of information out there. So please be mindful of what that looks like if you're an individual who's an independent contractor or an eligible self-employed individual. Next slide, please. Once again, the question that everyone has, how much money can I borrow? Well, it's based on that formula, and in the formula is 2.5 times the average monthly payroll for the 12 months preceding the date the loan is made. So what is the 12 months? Well, we've looked at calendar year being 2019 as the criteria, or the 12 months preceding the actual loan. So those are 2 things that are still out there. Again, I will defer to the banking and the lending institutions and their interpretation of the criteria, because through their platforms, they're rolling out the program, and a lot of information flow, well, actually all the information flow goes through them.
Right. In fact, these things are constantly changing. Since this presentation has started, we've got emails from some of our banking friends saying they're recalculating numbers that got put in yesterday. So this has not been completely finalized yet.
And again, it's the ultimate drinking from a fire hose scenario, and we're all in this together. We'll navigate through this together. We just need to have a modicum of patience as we get through this program and make sure that it's implemented and rolled out properly. One of the things I want to call your attention to is that in your payroll calculations, those do not include salaries above $100,000. So keep that in mind as you're doing your own payroll calculations, or as you're assisting your bank or lending institutions, or as your accountants are working with you on that. That's why it's important for you to start pulling all your payroll reports to be able to assess what the actual loan amount that's out there and that's applicable to your specific situation. Next slide, please, Beth. Where can I get one of these loans? Well, Stephen will get into a lot more detail as to the qualified lending and banking institutions on that, and how the process would actually work, as well as how the application is. I know we've heard a lot from clients that have had some existing banking relationships, that a lot of information intake has been done and is just waiting for the program to be rolled out properly, which in fact, indications were that it was being rolled out today. But as I mentioned earlier, about 10 minutes ago, I saw that some banks still had some problems with rolling it out on their platforms. Next slide, please. Again, the businesses that are eligible. Now, keep in mind, the CARES Act is, this portion of the CARES Act and the amount of money allocated to this, which was about $385 billion, is focused on the small businesses. And that has been defined as businesses that have been in operation on February 15, 2020, that have 500 or less employees. There is some additional criteria and some additional analysis that needs to be done on FTEs, independent contractors. But again, those are all still a bit fluid, and just make sure that you're reaching out to the right contacts in terms of information. Next slide, please. Okay, so this is part of where your accountants and your advisors will come in and assist you with this. And it talks about how much of the loan will be forgiven. Well, remember the criteria we spoke about earlier about the monies and the funds being used for payroll, being used for health insurance, being used for rent, for utilities, for mortgage payments that meet the criteria. Well, you would need to adhere to that criteria. You will need to be able to track that criteria closer, because if you don't, then there's going to be pro rata analysis as to what can actually be forgiven versus what you actually have to pay back on that. So the number of staff, well, your loan forgiveness will be reduced if you decrease your full-time employee headcount. Again, remember, this is a stimulus plan designed to be able to keep us through this stage as we navigate and we figure out what the next 2 weeks look like, and then the 2 weeks after that. So this is meant to be able to, for businesses to be able to make their payroll and keep individuals on their payroll and then salaries being paid.
Right. So I think one of the important things here is the last bullet point, which says you have until June 30th to hire your folks back. So the problem a little bit with that is you also have, it's also based upon dollars. So if you have laid off individuals and you aren't rehiring them until June, you may not meet that test number 2, which is your level of payroll. So please keep this in mind. That you're going to have to do a little bit of calculations if you've had layoffs as far as when you want to bring those people back in order to qualify for the forgiveness.
Next slide, please, Beth. In the interest of time, we'll leave this slide, this information for Stephen to address. Next slide, please. Again, one of the differences on this is that the EIDL will have some other criteria attached to it, similar to traditional SBA loans, while this PPP program doesn't. One of them being that there is no personal guarantee on this, and there's no collateral required. Next slide, please. Some of the other questions that we have seen is, when do you need to start making payments? Well, there's a deferral of up to 6 months on this. So just make sure that you're tracking that as well as you do your budgeting for after we navigate through this particular scenario. The loan will be due in 2 years, and you can pay the loan earlier, so there will be no prepayment penalties, but I will defer to Stephen and Diane on what those scenarios look like. Again, reminder at the bottom there, if the proceeds are used for fraudulent purposes, the U.S. government will pursue, because it's what we need to be doing at this time. What do I need to certify? I think Stephen will address that a little bit more in detail, but the fact is that we've all met the criteria for that first current economic uncertainty. That you have not and will not receive another loan under this particular program, the PPP. Remember, you can apply for the PPP and you can also apply for the EIDL. The EIDL, again, comes with a lot more criteria, and that does not have a loan forgiveness aspect to it. Next slide, please. We can go to the next slide. Thank you. Okay, the next slide actually talks about whether or not the forgiven debt will be taxable. And it's not, it will not be taxable. So The mortgage, rent, and utilities covered in this section must be in place before February 15th, 2020. So those existing businesses have met that criteria. For new businesses, there's a separate set of rules and circumstances that apply. And please, as I indicated earlier, please note that there are specific and technical calculations included in this section of the law. You should not rely on this description to determine whether to keep employees, reduce employee wages, or to determine your eligibility for loan forgiveness. Next slide, please. In the interim, what can I do right now? Well, we suggest you start gathering your payroll documentation if you've not have already done so. But before even going down that path, please make sure that you have your communication channels with your banking and your lending institutions in place, because that is your first step in dealing with this. And again, Stephen will get into a lot more detail as to what that's going to look like. So from our perspective, the payroll documentation, and then just get clear on your finances. You know, you need to really be able to understand where you stand in this particular scenario so that you can make the right budgeting decisions and be able to make decisions that are going to benefit your business, again, in 3-month increments as we get through this circumstance. Next slide. So we'll get into what the EIDL program is. This one is different than the PPP. This one has different applications. This one runs the application through the end of the year. The PPP loan application process runs through June 30th, 2020, but I will suggest that you initiate that application as soon as you can, just because of the limited funds that may be available. Under the EIDL scenario, that is being run directly through the SBA website, is my current understanding. But again, things are fluid, things are changing. So make sure that you're reaching out and establishing the right communication channels on this. There is an advanced portion to this of $10,000. So if you decided to apply for the EIDL, the advanced $10,000 criteria is easier to get to. And I think there's a quicker turnaround time on what that's going to look like. And at this time, there is no loan forgiveness for an EIDL loan. Next slide, please. So this one here has up to $2 million available per borrower. And again, this was going to be dependent on the credit worthiness, because this one is going to take that into account, the EIDL. Generally must be secured by some kind of collateral, and the interest rate as of when I did this slide was 3.75% for for-profit businesses. It is up to 30 years on the repayment scenario, but that also is going to be determined on a case-by-case basis. And you see the criteria there that it must be used for: fixed debt, payroll, accounts payable, and other bills that can't be paid because of the disaster's impact. Next slide, please. Borrower eligibility for EIDL. Small business or private not-for-profit, a business that has suffered substantial economic injury, businesses that are ineligible that have not complied with previous, businesses are ineligible if they have not complied with previous SBA loan scenarios. So please, again, be diligent in your assessment of what loan to apply for, and make sure you understand the different case scenarios for both of these loans. The affiliation rules are a lot more detailed in place, but they have made some kind of, they have instituted plans in place where if you fall under certain NAICS codes, and is your code as designated by the IRS, I think restaurants, I think some hotels fall under these codes, where you don't fall under the affiliation rule, you won't count as one business, and you can count as separate entities that are applying for the loan, is our current understanding of this. Next slide, please. And this just goes into a little bit more detail as to the loan amount, the permitted use, the term. This one is up to 30 years. The debt forgiveness, not applicable. And again, the caveat is not at this time. Collateral, yes, and the guarantee, yes, for loans over a certain amount. Next slide, please. What we understand is that the applicants exclusively deal with the SBA, and that the applications are submitted electronically or by email in this particular scenario, the EIDL loan. The requirements to provide the information are the business tax returns for the 3 prior years, the personal tax returns for each principal owning 20% or more, the personal financial statements for each applicant and principal owning 20% more. Next slide, please. This is the personal financial statement aspect to this, the applicant's debt schedule, and to confirm whether the business has interruption insurance. So as we, and it was again brief, our time is limited. We want to be fair to Steve and be able for him to provide the information from his end. One of the last things that we want to leave you with is that for those of you that probably have not been made aware, the 4/15 filing deadline, as well as the 4/15 first quarter estimated payments have been extended to July 15th, 2020. So please be mindful of that as we get through the next 2 weeks and to not have that additional stress or pressure to be able to deal with at this time. So the filing deadline has been extended, and the first quarter estimated payment for 2020, which would have been due on 4/15/20, has been extended. Also, we are seeing a lot of the states follow suit on this, and they're a little bit slower in issuing their guidance, but most of the states have also made extensions of their own filing requirements. Jay, anything you have seen in particular with clients you're working with?
As well as you probably are aware, your tangible return was due April 1st. Most counties now, or all counties now, have extended that out to May or June. So county by county decisions, but almost everything that was due in the last couple of weeks has all been extended by states and or counties.
Yeah, one of the things we're seeing is that individuals, there's a lot of remote working capabilities. Fortunately for us in our service offering and the structure of what we do, we've been able to keep working remotely. There's a lot of guidance online as to how to make that more effective. So if your business has been impacted by this, please be sure to reach out. And if anything we can assist in terms of what we've been doing on our end, I'll be more than happy to share, or any questions you may have pertaining to the information we shared. So in summary, 2 loan programs under the CARES Act that are going to be administered via the SBA. The PPP Paycheck Protection Program, which is a lot more lenient in its structure, which offers the loan forgiveness component, which is very important, but also you need to adhere to the criteria of what that looks like. So I think, Stephen, I don't know if the banks are thinking of instituting a separate bank account for those loans that fall under the PPP so that businesses and individuals are able to track those funds easier than normally would if it gets commingled with existing bank accounts. So from our end, we thank you again. Please remain well, and we're here to help assist in any questions that come up. Please send your questions to Beth. Thank you.
Thank you very much, Jay and Javier, for that important information. Up next, I would like to welcome Stephen Hoshak. He's a Florida native with over 12 years of banking experience in the Tampa Bay community. He has focused on all aspects of commercial lending and has had a specialized concentration in providing commercial loans to small and mid-sized businesses throughout the state of Florida. He has a passion for helping small businesses achieve their financial goals and enjoys his role in the expansion of the Tampa market. Mr. Hoshak serves as vice chairman of 211 Tampa Cares and is an active member of the community. He and his son, his wife, Sonia, and he has 2 children, Caden and Ava. Welcome, Stephen.
Good morning, everybody, and I appreciate your time that you've taken today to join this call. First and foremost, I'd like to thank all of our partners on the call. I think it goes without saying that there's never been better teamwork in the financial sector in trying to navigate, essentially the craziest time that we've all been through in our lives. So I appreciate your partnership, and to Javier's point, we will get through this together. I would like to start with providing some contact information for some of the programs that Javier spoke of, and then I will go into the PPP plan. The first one that I would like to give you some information on, the Florida Bridge Loan, which was one of the first pieces of financial help that was offered to small businesses, which is the $50,000 loan for 0% for the first year. That is a program that's being taken care of through the SBDC. There's multiple offices throughout the state of Florida, and you can apply for this loan at www.floridadisasterloan.org. You can reach out to your local SBDC for information. And I can also provide this information later on so that it's disseminated to everybody that's on the call as well. As far as the EIDL loan, Economic Injury Disaster Loan, I would also ask that you lean on your SBDC organizations. These companies are constantly involved with small business, large business throughout the year. They help with business plans, projections, and they're very entrenched in these programs right now. They're subject matter experts and can be very, very helpful in unison with your banker. It's good to have as many resources as possible, which is why I want to make sure everybody has that information. Disaster customer service at SBA.gov would be your best point of contact for the EIDL loan directly through the SBA. What I will tell everybody on this call right now, and this is just the truth, they are very, very, very inundated with applications right now. As you can imagine, they're coming from all over the country, and they're very far behind, hence why they're doing the $10,000 advance right now, just to deploy capital while they're working on these applications. The EIDL program is a fully written loan, underwritten loan. So they're going to ask for all the financials that you would typically have through a normal SBA transaction. Keep that in mind. The other thing that I would tell everybody that's very, very important, if you currently have an existing 7A loan or a 504 loan, as effective as April 1st, your next 6 months payments will be made directly from the federal government. If you are not aware of that, make sure that you reach out to your lender and have that conversation, because when this all started, a lot of the lenders reached out and were trying to get deferment set up, or borrowers were calling in for deferments. You don't need the deferment right now. The government's going to make those payments for you. And just for further understanding, that is not meaning that these payments are going to be put on the back end of your loan or your loan's going to be re-amortized. They are actually making those 6 months of 6 months of payments for you. So just keep that in mind. And now I will jump into the ever-moving PPP loan. Javier, you did a great job covering this information. I appreciate it so much. So we got updated information last night. There's still updated information coming out now. So my goal today is to kind of level set where we are from a banking sector and the things that we do know for certain at this point in time. So one statistic that I want to give everybody just to kind of provide scope. Last year, the SBA, and that means every lender in the country that does SBA loans, produced $20 billion in total loans approved and closed. We have been given a task to disperse $349 billion by the end of June, effective last Friday. So that amount of money that has to be dispersed has really raised capacity issues within every lending institution in America. Hence why you're seeing American Express, some of the credit card processors, different companies getting involved and getting SBA designation to help with the flow of applications that are coming through. I would ask everybody on this call to make sure that you reach out to your banker and have a solid conversation about what the options are and what their process is at this point in time. Some banks have taken the position that they're only going to process their clients' PPP applications and not outside clients. Some non-bank SBA lenders are going to be processing SBA PPP applications for all clients across the board. There are choices out there. There are several lenders that are participating in the program. Make sure you know who's going to handle your request and if your institution is capable of handling that request. I will tell everybody on this call, as of right now, there's not a lender in this country that is taking an application for the PPP program. At 1:30 today, American Momentum Bank will be joining a call with NAGL, which is our governing body that appeals to the SBA on the Hill, to discuss further the PPP program and how to enact this and get the funds out to the borrowers in the community. So I want everybody to understand, the news has said, you know, the money will be available Friday. There's been a lot of information sent out there, a lot of misinformation. The reality is we're still trying to figure this thing out, and it's very important for everybody to understand that. And I can assure everyone on this call, we want to figure it out quickly so that we can get this money out, as we know it's extremely important to small business. So now I'd like to kind of jump into the program a little bit. I'm not going to go over, you know, most of the things that Javier went over, but I want to dig deep into the things that we know right now. So what should you be doing if you're, you know, looking to obtain this financing? One, make sure that you've identified the lender that you're going to work with and identify their process. I can tell you the application that's been provided to some has already been revised once, and there's talk that it's going to be revised once again. This is not your bankers trying to make your life difficult. It is the situation that we're dealing with as we get information disseminated. I would encourage all of you to have your payroll forms for 2019, all of your information for payroll, your W-2s, things of that nature in hand, your tax returns up to date, your 2019 P&L balance sheet up to date. Make sure that you've got all of your financials in order so that when the bank asks, you have it and you're ready to go, because time will be of the essence, and $349 billion seems like a lot of money, but it will go quick. In regards to the calculation is essentially the last 12 months averaged out, and it's going to take the compensation paid to employees in excess of $100,000, that will be removed from the calculation. So if somebody makes $150,000, you can only go up to $100,000 for the sake of the calculation. The payments also need to remove any payroll that's been paid to independent contractors or sole proprietors. You'll then calculate the average monthly payroll costs, divide that by 12, and multiply it by 2.5. And that's going to give you what your essential loan amount is. The only thing that will change that loan amount is if you have already received an EIDL loan. If you have, that EIDL loan will need to be added to that loan amount, as we will essentially refinance that loan through the PPP program. Keep in mind that $10,000 advance that Javier mentioned earlier does not need to be included in that calculation, as that's going to be forgiven. The EIDL loan that can be included in the PPP loan would be a loan that was issued from January 31st to April 3rd. So if you had an EIDL loan from one of the past hurricanes or something of that nature, that would not be eligible to be part of this PPP program. In regards to what can be included in the payroll cost, that would be your salary, wages, commissions, cash tips, payments for vacation, parental, family leave, things of that nature. The interest rate, and I say this now because, again, it can change, on this loan as we speak is 1%, and the term is currently 2 years, up to 10 years. And this kind of, the next paragraph that I read right here really leans into when you would have to pay that 1% and that 2 years, because every PPP loan automatically goes on a 6-month deferment. So there's no payments made for 6 months, but interest will accrue during that period of time. The amount of loan forgiveness will depend on the total payroll costs, payments of interest on mortgages, and any obligations that occurred before February 15th. This would also include rent payments and utility payments, again, prior to February 15th. Not more than 25% of the loan forgiveness amount may be attributable to non-payroll costs. So essentially 75% must go towards payroll if you want this loan to be forgiven, or the remaining portion will go into that loan that's 1% over 2 years. I know a lot of this can be complicated. I know a lot of it can be confusing, but those are the things that I feel confident saying we know right now. When will banks deploy these funds? I do not feel like it will be today, but that is my personal assumption. I believe this is going to most likely be a beginning to midweek next week, but we are scrambling to get guidance so that we can get these funds out to you. And I'll close with this in saying that American Momentum Bank A lot of my peers in the industry here in Tampa, we want to help you in the biggest way possible, and we're doing everything we can by getting our teams aligned and ready to do what we need to do to get these funds out to you. So as soon as we get the correct guidance, we will be taking applications, processing them as efficiently and as quickly as possible. And if you have any questions or concerns, please lean on the SBDC. Please lean on your CPAs. Please lean on your bankers, and know that you've got a team of financial professionals that are out there with your best interest in mind. And with that, I appreciate everybody's time, and I wish everybody good health and high spirits. Thank you.
Thank you, Stephen. Again, if you do have questions, please either email Bama at beth@bama-fl.org. You can email FloridaMakes, or you can type your question into the chat bar and we'll get those answered for you. I would like to thank all our presenters who have taken the time to gather and present the information to you today. We do have more upcoming webinars in the next few days, so please join us through the Bama website or the FloridaMakes website. As noted earlier, the recording of today's webinar will be provided to all attendees within a few days. I thank you for attending today, and as you exit the webinar, we ask that you please complete the survey. We're seeking your feedback about how to improve these webinars and better meet your needs with topics of value to you. Thanks again.